Wednesday, February 28th, market analysis is Stan Ehrlich. A little late today, 10:15 California time, approximately. The stock market indexes, I always start out with the indexes and then go into futures and sometimes forex sectors, maybe even a little crypto, cycles occasionally, seasonality sometimes, sort of like cycles. Today, let's go with the March E-mini. And we're down a bit, not tremendously, about 10 points. Translates into approximately a point lower for the SPDR, SPY. The DIA is also down a little. They've made minor new lows or very close to it for the last couple of days. Not very significant, not dropping very quickly, and not showing any signs of being a significant top, but it's starting to come down. And we do have that divergence situation. We have the highest RSI reading back at late January at these high prices because of that particular move up. But when the prices made new highs, the indicator did not, causing a single divergence. Then it did it again. We do not have new highs on the RSI. That's the third highest high where prices did make even a new high. So you've got a double divergence. And not that that makes it a lot more bearish. It's more interesting, but it does imply the market's going to start coming down. Now we didn't get overbought. I don't have a bearish signal. I don't have too much to work with. If we're right about this, and I think there's a very good chance of that, we're going to come down to approximately 49.46, call it 49.50, something in there, to this little support area, which is a low only a couple of weeks ago on February 13th, and a little activity slightly before that. Nothing major. We have another low to watch for in terms of it bouncing back off of support, 48.66. But the more important zone here, in my opinion, is the range I'm about to make a little bit better to see. And okay, this yellow zone is bigger, has more data in it, stronger. I think we're going to reach it and turn around at this point. And that would be down to 48.45, starting at and down from there to 47.45-ish. That's, I think, going to be the bottom of this break, and then back up into new high ground with the bull market continuing. Short-term bearish. Looking for some confirmation of that. I haven't got too much to work with. Intermediate term, fairly neutral. This is a short-term downside correction. Longer term, definitely bullish. Next chart is the 1 minute chart. Well, it's the 5 minute on the E-mini we were just looking at on the daily. And we opened around the close of yesterday and dropped off to those minor new lows. We just had a pretty good rally, but it failed at that time. And we slipped back down, and now we're going sideways, sort of. A little lower in the day, not much. Next, NASDAQ futures, the March futures contract. Pretty much the same story, but there's a little bit better possibility of what we would like to call a double top. If that's true, the breakout point would be the lowest low between the two highs, and that's 17,378 or so. And we're nowhere near that at this point. We're not dropping very quickly. I can't be very convinced that that's correct. We did get a sell signal, an ER red bearish engulfing and overbought conditions within the allotted amount of time on February 16th. And it made some good money for 3 days and got out just before, or rather as, the market was jumping back up again on that day. I think it was NVIDIA that came out with some whopping good numbers and quote unquote saved the market. I don't know, maybe so. Good excuse. And we're out of our short. Popped up, but when it made new highs, it couldn't hold it. It didn't. It just peaked up there like a periscope, looked around, and then pulled back down below the previous high or water level. And we've been sinking since a bit. Again, nothing particularly aggressive. Look at this on a 1 minute. Yeah, this is also a 5 minute chart. Here's our trade from our bearish engulfing in detail. Profit on the close in the first day, and that was February 16th. Next day, holiday trading, so we didn't do very much at all, sideways yellow. Then it dropped like a rock, and I was smiling ear to ear because the trade was starting to work super good. And the next day, it dropped again to new low ground. But all of a sudden, that NVIDIA news came out right around 11:45 California time, or the expectations started to sink in big time that there was going to be a really good number. I'm not sure which. I don't really care. Water under the bridge. We got stopped out on the rally, and I'm glad of it that it's at this point. I'm just trying to justify another break to the downside, and it's just not. It's dribbling off here. That does not make me real happy so far. Next chart. We're back to bonds. Bonds are going sideways lately. They're really neutral on the RSI. I have been and still am looking for another minor new low, but I have been also mentioning that it could dribble around and go down slowly. And I'm not looking for any major break or any major bear move. I just think we don't have a low set quite yet. If we do, and that was just a few days ago, it certainly didn't give me much handle on it. And we'll be starting to see minor new highs very soon if that's true. The trading range that we've got here in the last 2 weeks or so is fairly small from top to bottom. And the movement before that in the last couple of months has been basically down. Although the bigger situation is from the low, which we did catch with an ER buy signal. And here's a couple of the trades that generated from that. One of them was a whopper, huge. I guess it lasted 2 months. Real big. Okay, so the overall situation is I do think bonds are bottoming out. I'm long-term bullish. Short-term, intermediate term, neutral to maybe a hair bearish. Next chart is 10-year notes. We did catch the bottom of notes. Also, same excuses, same reasons, whatever the heck, it did it. Big trade, worked out well, given the inputs that I'm using, and I probably fiddled around a little bit to make it look the best. Nevertheless, it was 100% automated. And I just simply, like you can too, make adjustments to what we call the kicker, or the way that the trailing stop moves. Faster, slower, whatever. So same comments about 10-year notes as bonds. I'm not really bearish. I think we're going to make another new low. It won't be that big a deal. And the overall movement up, I'm going to try to catch the beginning of, which I think is going to be very soon. I just don't know about the low here, although it was probably a bullish engulfing. I can't get excited about that. It wasn't anywhere near oversold, so got to wait. Next, crude. Big sideways trading range for many months now, actually a year and a half. The resistance above the market, we tested again this morning, again, and it's a minor new high for a couple of weeks. Let's zoom in on this. So it didn't stay up there. That is resistance. It didn't get overbought, but we're looking at resistance, and it looks like it just can't muster enough strength to hang in there at this particular point. If we were to close in the resistance area, then I could probably justify a commentary up to about 82.67. Yeah, for the next stopping point. But it does seem to be stopping again and again and again, this time slightly higher at the bottom of the resistance. So I'm not going to be a darn bit surprised to see a new low for a couple of weeks very, very soon. Next, heating oil. On the way down already, new low for a month or so. Looks like it's going to close around or below the previous lows, hopefully below, a little bit better breakout. Not oversold yet. Room to go all the way back down to these support levels, 24,837 and down to maybe 2350, 545. So down we go. Next, we've got unleaded gas or ROB, and it may be building a head and shoulder top. This is a bearish engulfing at this point. Current low last is close to the low. I drew in a neckline, which I don't like. It's a little too steep for my liking. Usually these necklines are maybe something along those lines, if they're going to be upward slanted in the first place. They could be flat. The necklines could be downward slanted, but here we go. The timing is good. You've got approximately 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 to the top. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12, 13, whatever, to the top over here. That's close enough for government work. No offense. And the prices are right, and the timing looks good. And all of a sudden, we've got a bearish engulfing today. So today could be the last shoulder high. Rob, unleaded gas, downside objective I haven't measured yet. You measure from the highest high straight down to the neckline, and that's your stick, so to speak. The number of ticks or points you're going to be dropping, the difference between the two price levels. And the day that it breaks out the downside, you take the high of that stick and you drop it straight down. So I'm going to give you a visual guesstimate of, so back down to these major lows over here. So 2.3. Yeah, that looks very, very possible. Next, gold. Boy, what a year last year was. I keep saying that. We had incredible signals in gold and silver, just knocking it out of the park, left and right, top and bottom, top and bottom. So not too much so this year so far. I mean, boring. The last signal was on January 1st, 2nd. That's it. It worked. Right now, we're very neutral, very sluggish and sideways. And I favor it's starting to slip some more because I like the way the longer term picture is developing in favor of testing support areas below the market. Here again, we're also kind of between a rock and a hard spot. So not super confident about gold and silver these days. Same commentary for silver. I think that the odds favor challenging support and maybe breaking support and challenging the next step down, which would be 21.4 in silver, 21.4. We did catch some incredible trades. I mean, every time I've got a little red or green circle, that's a top or bottom. We caught trades in this thing last year mostly. Just great. Next, platinum. Some great trades, not doing the same thing on this chart and expanding the spacing here. I think that it's going to break down, looking for lower levels and looking for the support at 857 to be challenged and maybe broken. Next, copper, the last metal. Up above, resistance, support below, bouncing back and forth between those levels. I don't know, probably going to continue to do it. So we just hit the resistance almost. It could have one more little bit of strength to hit the resistance properly, but that's close enough probably. And we're now starting to make minor new lows for a few days. Next stop on the downside, probably the next support area, which we just tested 3 weeks ago or so. So looking for a little bit more of a dip. Next. Now, grain markets, important stuff developing in grains. The first one I'm going to start out with is soybeans. It is oversold right now, but the driving feature is the fact that it's made new lows for 2 years. And so far, it's not bouncing back up above resistance at all. In fact, yesterday's rally high was smack dab at the first level of resistance on the rally, and it pulled right back down again. And today, we almost made another new low for the trend. Not quite. So we're going sideways a lot, 4 cents higher, no big deal, no reversals, no green buy signal because we're oversold. If I got a buy signal, watch out. Here comes a buy signal in wheat and corn. But let's look at meal and oil first. So oil, it's also oversold and in a support area, not below it. But beans could rectify that problem if I got a green and bullish engulfing and it started to chew up into the resistance and started to go through it. This hasn't broken support yet, and it's oversold, and it's prime target for a rally. So I'm liking the long side. I'm just not getting a signal as yet. If we have a strong enough rally before the close today, I will get a signal because we're below yesterday's lows, oversold, blah, blah, blah. Here comes meal. And it's the same as oil. We've got a support area that we're testing and we're oversold. I just don't have a signal yet. It's come very close to it. Yesterday's soybean meal was a bearish engulfing. If that had turned out to close higher yesterday than the previous day's close, I would have had a buy signal in support in oversold conditions, but that didn't develop. So I think we're about to turn back up, and here we go. Corn. 2 days ago, told you we got a buy signal. We're long. We're not catching an ER3 yet. Doesn't come down low enough, and we got one more day tomorrow and the rest of today to come back to the appropriate price. I'm not plotting that right now. ER1 caught a profitable day trade, and ER1 overnight is still in a long position, and we are close to high and last, doing pretty well. Our stop has now come up significantly and is a lot less riskier, but I'm not recommending running after any trade ever. Don't ever run after trades. Catch them when you're supposed to, your plan tells you to, or you missed. Next chart is wheat. And also in wheat, even more profoundly, potentially, we have a buy signal a few days ago. Zoom into that. The signal is still on the lowest low for the move down, and the low on February 20th was right almost exactly the same as the previous low for the whole bear market, which was on November 27th. Double bottom, maybe. I've said this now for over a week. It's not proven me right yet. It's not proving me wrong yet. Wrong would be closing below, getting below the low made on February 20th. Right would be starting to push through some of these highs we've got for the last couple of weeks and at least getting up to the resistance area at 620. I'll feel a lot better if we get up to 620 about this long-term double bottom, maybe. It's premature to tell you that the wheat market may be trying to bottom out for a long, long time to come, many months. We'll see. Next, wheat. 1 minute chart, 10-minute chart. So this is our buy signal several days ago at the bottom in wheat. That's the second lowest low. Popped up, scalp made some money. ER1 overnight lasted 2 days, made some money. Our trigger for ER3 is that green horizontal, which we caught to the exact tick. The low of the day, 3 days after the signal day, and that date was February 23rd, was the exact same price that we predicted 4 days earlier because of the reversal day in our mathematical calculations. I'm glad to show this. I don't see it that often, but we do catch to the exact tick sometimes turning points. Now, granted, the next day it did make a lower low. That is disappointing. Sometimes this holds as the low and it just goes straight up afterwards. So far, this is not particularly that profitable. At least I can tell you that my trailing STS stop is now higher than our entry by a very small amount. And so if it gets hit at the price that it's at right now, there's no damage done and no reward either, really. But if it keeps on going up, very big different story. Next chart. Cattle. Trade almost the bottom and move. Didn't catch the lowest low, but the criteria that I needed to get a signal was fulfilled, and we did get a signal on December 15th. You can see the trailing stop for the two different trades. The ER3 trade actually got caught on which is good in this case, 3 days after the signal day, right there. And that's why this yellow line starts on that day, because we're now in an ER3 overnight position. This is the ER1 overnight. The stop is different, and it did get out and take a profit because the stop moved faster, if you want. You could slow it down, but that's 2020 hindsight. This setting is frankly coming along much too slow for my personal opinion, and I would go in and change the kicker to this from a larger number where it's at now to a smaller number to tighten up the stop. I've got reasons to believe this is in the process of topping out right now because of resistance, and I just don't have any close below the last few days with the lows. It almost did it. I mean, it almost got there, but it's still staying about where it's been for a week and a half. No breakout one way or the other. So I would probably change my trailing stop to much tighter because of this stuff. Now, that's not built into the code. I'm manually changing something, which I allow you to do, but you really should be settling on a STS number that, because of your testing and experience with the strategy, you like, and leave it alone. But, you know, there are extenuating circumstances occasionally. Next chart. We got the hogs. And overbought, touched resistance a couple days ago in the rally, stopped it cold, backed up a little bit. Hey, we're just going sideways the last day or two. Not too much happening. So we're very close to a little bit of support. Really can't come up with something particularly good here unless we have a bearish engulfing today, in which case we would get a red new sell signal. Now, OJ, sell signal in the first shoulder high at the time, you didn't know it's a shoulder high, and boom, down we went. Great. Sell signal on the top of the market, the high day so far historically, fantastic. A whopper. And you don't know at the time that it was the head of a head and shoulder top. Down you went. Now you start to rally some. I encourage you to listen to my recordings on December 11th, maybe even September 10th. I said so as also, or September 8th, rather, Friday. But in particular on the 11th, because I had forecasted a couple days more for the top, and I was a little too high in price. So my timing was only one day too far out and a little too high in price. I thought it was going to be about here, right there. But then we had a bearish engulfing, and that started the shoulder high, came down to the neckline, bounced a little, kaboom, breakout, minimum downside objective fulfilled. Wow. And during the process, we got a bullish engulfing buy signal almost at the bottom. This was a short one-day profitable trade, nothing great. Unfortunately, we didn't get a signal on the low day, whatever. But this rally got into the same high price levels that it topped out around that level twice before. It did it again. The system caught it, got short. We had a nice trade for a couple of 3 days all the way down, and it rallied. We're out of the short, and the rally didn't go anywhere. No new highs. All of a sudden today, we start collapsing again. If we start to make lows lower, the 942, I think that is, no, 342 on a closing basis, then we're going to start to challenge the previous downside objective and probably make lows lower. I'm liking that forecast. Hopefully I'm right because I like my OJ. Next, cocoa. I also like my cocoa. But this blow off top worked very mildly a couple of weeks ago. I didn't like the fact that it was not dropping very quickly until that day. But then it ran right up, gave me a false sell signal. That didn't work. I don't even think I made any money on a scalp. Probably not. Losing trades. And went up for a couple of days more very, very sharply. And I mentioned blow off tops. But where's my reversal? Where's my bearish engulfing? Unfortunately, I don't get it every time. So today, new low for a couple of days. You know, not that big a deal, but it's a quite significant large amount down. So I like that feature. So I'm looking for lower levels. The first one down is going to be approximately 5700, 5700. Next one is going to be the low of that little trading range, which isn't much, 5320. And below that, maybe. Next chart, coffee. Not too much to say. drifting lower slowly, not oversold, waiting for some signals, slightly bearish opinion. Sugar, pretty much the exact same thing. Next, and lastly, cotton, a rag. Oh boy, do I have to say blow off top again? I have to say that. Two really big sharp rally up. RSI is now back into overbought conditions. High price, way into high ground, high price. From a price action standpoint, this very much looks like a major bullish breakout. But the problem is the size of the move up for the last 2 days has been excessive. And I kind of figure that that is a short term, if not even more importantly, longer term blow off top. So I'm looking for sell signals. And if we can get back below the support area on the next drive down, then we'll have a top of some major consequent longer term. Right now, minor blow off top, back to support, and we'll see what happens about any rally possibilities after that. Looking for a minor downside correction to support at this point. Next, we're back to nothing, and I will see you tomorrow. Thank you very much. Profitable trading to you. Signing off, Stan Ehrlich.